Welcome to Alpha Insights. I'm Harper. Today we're unpacking a small but interesting photonics name, Poet. With me is Ben, our commodities and hardware expert. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Harper. Good to be here. Poet is one of those niche semiconductor firms working on integrated photonics for data center transceivers. And there's been a bit of noise around early commercial activity.
So, the real question here is, what exactly does integrated photonics mean, in plain terms?
At a high level, think of photonics as doing the same job as electronics, but with light. Poet builds photonic integrated circuits that put several optical functions on a single chip or module. That can shrink bill of materials, cut power use, and potentially sidestep shortages in discrete lasers. Industry write-ups recently framed the opportunity as really large, on the order of 1.6 trillion transceiver addressable units, which is why people are paying attention.
Yeah, that's a good point. But, and this is important, Poet's actual sales are tiny today. Trailing 12-month revenue is under $1 million, while net losses are material, roughly negative $50 million on a trailing basis, and EPS around negative 0.65.
Right.
On the balance sheet side, there are some positives. Public filings show about $92.7 million in cash and a current ratio around 2.3. So short-term obligations look covered for now. Debt is low, roughly about 11% of the capital structure, which gives management some runway to pilot production and early shipments.
How real is the commercialization story? I saw mentions of a few partners and press coverage in late March.
There were partner-related items in late March. A manufacturing partner and a module partner were discussed in market pieces. And the company has said it's moved from pre-revenue messaging toward early commercial shipments. The practical implication is this: Poet could be positioned as an alternative when discrete indium phosphide lasers are tight, but converting pilot orders into steady, volume contracts is a big execution challenge.
Got it. What about valuation and what analysts are saying?
Market capitalization is around $790 million today, and standard profit multiples don't work well because the company is loss-making. Price to book is elevated, roughly 7.6, reflecting premium expectations. The mean analyst target sits near $6.93, which implies about 37% upside from current levels, but coverage is thin and forecasts are sensitive to whether commercialization scales. I mean, investors need to balance two sides. On the bullish side, platform-level IP and early partner ties could accelerate time to revenue if hyperscalers start adopting integrated solutions because of laser supply issues. On the downside, if orders stay small or margin expansion stalls, the company may need more capital, and that risks dilution. Competitive incumbents and other photonic startups are also circling the same opportunities.
Interesting.
Near term, the main things to watch are any follow-up filings or partner disclosures that specify order size or timing, and the company's first quarter results in mid-May, where management should give an update on production scale and order cadence. Also watch hyperscaler spending and broader semiconductor headlines. Those macro variables still matter for demand.
So from a practical standpoint, what should listeners track if they're following Poet?
Watch 3 practical signals. 1. Repeat orders. Pilot shipments are fine, but recurring purchase agreements are the big confirmation. 2. Margin trends and unit economics. Integrated photonics only makes sense if it meaningfully lowers cost or power at scale. 3. Cash runway disclosures and any financing plans, because continued losses without revenue growth raise dilution risk. Analysts note that the next few quarters will be decisive on all 3. Also for traders, expect knee-jerk moves around partner news and earnings. Volume tends to spike on headlines, and that can be a chance to trade, but it also means downside can come quickly if news disappoints.
Okay, let's wrap up. What are the key takeaways?
First, Poet has a compelling tech angle and early partner momentum, but current revenue is essentially negligible and losses are significant. Second, The balance sheet gives the company some runway, yet execution and dilution risk are real if scale is slower than expected. Third, the next few quarters, partner disclosures and the mid-May quarter update, are make or break for proving the commercialization story.
Great summary. Quick reminder, none of this is personalized investment advice. We are sharing analysis and data for informational purposes only. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Ben, thanks for joining.
Thanks, Harper. Always good to dig into the details.